Hey, what's going on, PokeGeeks? Another video for you. This one, we're going to be talking all about market corrections and figuring out if that's what we're going through right now, but we'll talk about market corrections as a whole as it pertains to more traditional markets like the stock market, but then I'll also give examples and we'll talk about how that pertains to the Pokemon market. But before we get to that, you know the usual drill. Hit the like button, hit subscribe, hit the bell. All that stuff helps keep this channel going, helps keep me going, knowing that you guys out there are enjoying the content. So I'm gonna keep hitting that home, and hopefully you guys can keep hitting that like button. So with that, let's get right into it. First of all, let's start off with what is a market correction. Now, if you go to Investopedia.com and you were to type in and try and find market correction, they define it as a decline of 10% or more of a particular asset from its most recent peak. Now, what that means is just the most recent high price that an asset has seen, it's dropped off at least 10% or more since then. Now, that can happen for a number of reasons, but we'll get into those. When you think about this in terms of Pokemon, you can think of just recently in the last couple of months as we've seen a lot of prices start to cool off. A lot of things have lost 10, 20, 30, 40, sometimes even more percent since the kind of peak in November, December, when a lot of prices were just really going crazy, and I think a lot of people out there agreed were pretty overvalued from what a lot of those cards should have been worth. So now we're seeing kind of that market correction as prices begin to come down to more reasonable levels that are kind of in line with what a lot of cards should be valued at. Now, don't get me wrong, a market correction does not just blindly affect all cards or all collectibles of a certain thing. There are still definitely cards that are going up, even as some of these cards are falling down in price. Now, how does a market correction happen? Well, a market correction can happen due to a lot of factors, including large-scale macroeconomic factors, or when it comes to the stock market, it can be something as simple as just single company mismanagement that is attached to that stock. Now, when it comes to collectibles and it comes to Pokemon in general, we'll mostly be talking about macroeconomic factors when it comes to that. A lot of what caused the most recent hype and essentially those peak prices that we reached in November and December were mostly due to the Logan Paul box break, and that flooded the market with new people, new money, a lot of people who were trying to, get rich quick by buying into what they saw on YouTube from one of their favorite influencers. And so that brought a lot of people into the market, thus making it kind of blow up. And as these people don't really know how to value those particular cards, they don't know where the price history has been, they're more likely to spend that money that they're bringing into the market, whether or not that card's overvalued at the time or not. So a lot of that was kind of self-perpetuating, that kept pushing things towards a peak that they eventually reached in November and December. Now, talking about macroeconomic factors with what's happening now and going through a correction, we're starting to see a cooling off period. A lot of those people that came in when Logan Paul did his break have now started to leave and take their money with them, as some of them are not making as easy of a dollar as they were back in November, December, January, and February. Now it's coming to the point that a lot of people bought into buying cases of battle styles, thinking that just Pokemon booster boxes were going to keep selling regardless of what was in them for $150 till the end of time, and that just was never going to be the case, most likely. There was always a small chance that that would continue on for a period of time, but eventually it was likely to cool down as more people kind of left the hobby or left the collecting space or the investment space, whatever you want to call it, when it comes to putting money into Pokemon. But now that it's cooled off with battle styles, a lot of people are either taking losses or they're just barely breaking even after doing all that work for battle styles. They're saying, oh, this isn't worth it, and they're going to take their money and go elsewhere. So as a lot of that money exits Pokemon, as a lot of that money goes to different markets instead of ours, we're going to see those shrinking of prices, those shrinking of demand. And as there's more shrinking of demand and a higher supply, because we've been printing for this giant demand we've had for the last few months, that will continue to drive prices down. Not just of the sealed booster box prices or elite trainer boxes or any of those things, but also of the single prices. As there's more and more singles out there for the people who are still around, who are still opening, those who maybe are still spending in order to open, we'll see a lot of those cards out there. And I don't think you have to look for a better example than Shining Fates. Shining Fates went through multiple waves, was printed to high heaven, and now you can pretty much go on to TCG Player, and the most expensive card in Shining Fates, other than the Charizard, is Skyla Full Art, which is $25 maybe right now. So when you can get the second best card, or some people might even say the best card if you're not a Charizard fan, for $25, that kind of tells you something. You could probably finish a complete set of Shining Fates for under a few $100s. And so that just goes to show that when there's a huge supply, there's a cooling off of demand, you're going to see price continue to kind of plummet down. And that's part of the correction. That's the market correcting those overvalued high prices that we were going through for so long. Now, when can a market correction happen? Well, there's really no telling when a market correction can happen. They can really strike at any time, whether it's the stock market or a secondary market such as ours with collectible trading card games. But the one thing that there is, to kind of ease some tension, is that there are indicators that you can look for when it comes to analyzing whether a market correction may be coming. There were quite a few people out there who saw them, and these were the people who were, to most people were sounding bearish during a bullish period, who are, exercising and preaching the words of caution that some of these prices are a bit crazy, and if you buy in now, you're really only destined to lose money in the short-term future. People like Jake from Pokeeconomics, people like Squeaks Game World. There were plenty of others out there, even SM Pratt himself. There are plenty of these guys out there who have been talking about use caution, over these last few months while prices were just kind of astronomical. And it goes to show that in the long run, while there were plenty of naysayers or people who didn't want to listen to what they had to say because that was, making them feel as if, their assets were worth less than what they thought they were worth, their preaching of caution actually turned out to be very right. So just remember that when you see all new price highs, you see peaks in prices, markets do not just continue on forever and ever. They are cyclical, and so what goes up must come down, and you need to keep that in mind when you're analyzing where a price of a particular asset is at and where its history of where it has been. Now, why do market corrections happen? Well, for a couple of reasons. One is that there are generally concerns over market stability. Those people who are kind of sounding bearish during a bullish period are, kind of those people who are being outspoken about how some people are feeling about the market, which is that this can't continue forever. This is unstable and, will eventually turn around or turn back down compared to being at an all new peak. So concerns over market stability are really some of those factors that kind of drive price down as things start to cool off from that peak. And one of the reasons why market corrections are also healthy for a market is because it calms overinflated markets. You see plenty of markets that get very overinflated. There are different sectors of the tech stocks that have been overinflated recently. Crypto has been overinflated in certain aspects recently. The NFT space, collectibles, recently have pretty much all been a bit overinflated, and I think a lot of that does have to do with just the kind of printing of money that's gone on in America. A lot of people had disposable income to essentially just throw away for the last year and a half, 2 years, and as they did, a lot of that found its way into investable markets. But a lot of that is what you call fish money, or generally there's plenty of fish out there, but the sharks are going to find it and they're going to eat the fish. So these amateurs come in with their money to invest, and as they make moves over a period of time, eventually they're probably going to lose it all or lose a large portion of it, and a lot of that money gets absorbed by the sharks. So don't be a fish, be a shark. Be smart about how you invest your money, and make sure to take into account factors like, is it possible that we could be seeing a market correction in the future? Whenever you're seeing all new high prices and things are kind of getting a bit wonky and a bit crazy, that's always a good time to sit back, take a moment, and reanalyze what's going on in the market. Damaging in the short term, corrections can be healthy, adjusting overvalued asset prices and providing buying opportunities. Now, what that means is essentially that you'll get more opportunities to buy as those markets continue to come down. Eventually, they'll come down to a point to where they have overcorrected and they've gone past the point of where that particular asset should be valued, and people will start to buy in. That is generally when you will start to see great buying opportunities. But what are some other things? Like I said, reevaluating the market, or adapting to a new market, is something that you should always have an eye on and always be willing to do, because the market will change whether you do or not. But I guarantee if you just do the same thing year after year and don't take any of the market into account, you're eventually going to lose. You have to adjust and adapt to a changing market time after time. Diversifying assets is something that a lot of people talk about, but there are different ways you could diversify your assets. When it comes to collectibles, you could collect different card games or diversify into different ones, because if one card game in particular just happens to take a big hit for some reason, you have other ones that could be rising as that one's taking a hit, thus making it a little less painful to deal with a downturn or market correction. The thing is that market corrections are generally short term. They only last for a few months, maybe a year, but eventually things turn around and they start going back up again. Like I said, markets are cyclical. They go down, they go up. So the smart thing to do is, to diversify, and if you can weather that storm of a market correction, hold fast. Don't, chicken out and sell everything you have because you're worried it's going to go to zero. There's one thing I can promise you, is that it will be a long time after I'm on this earth when Pokemon goes to zero. So I wouldn't worry too much about the long-term, prospects of Pokemon. But in the short term, doing things like diversifying helps you weather that storm of when market corrections happen and prices begin to go down and you start to feel like you're losing your shirt. Diversifying will make you feel a little less like you're losing your shirt, maybe just a sock. The big thing is that you should stick to your trade plans. Not just stick to your trade plans in the sense that you should do exactly what you were always doing before the market, started to change, but that when you set out a new trade plan adjusted to this new market, make sure you stick to it. If it says you're going to hold out, even if you lose 30, 35, 40% on an asset, make sure you hold out. It may be painful for a while, but if you've evaluated that the market that you're holding this asset in is a long-term bullish market, then hold on. As you hold on, you will eventually be rewarded when the market turns around again. And last but not least, don't forget to keep an eye out for buying opportunities. As that market starts to hit bottom, trying to find the bottom of a market is a very futile endeavor. It's not very easy to ever know when the bottom is going to be hit or the top's going to be hit. All you can do is kind of, sell when you think it's appropriate to sell and buy when you think it's appropriate to buy based on what you think that thing is valued at. And you may see it still move down, still move up, but if your long-term evaluations are correct, you'll eventually be rewarded for buying that thing while it's near its market bottom versus near its market top, as so many people did in Pokemon in the last few months. I think a big part of what goes into investing too is human psychology. So a lot of it is understanding how you yourself works and trying to fight those feelings of greed, fear. Fear will drive you to sell because you think you're losing way too much money, even though you know in your actual conscious mind that this is a particularly good long-term asset. So you have to fight that fear. You have to learn how to deal with that emotional fear or deal with that emotional greed. When you see things that hit their peaks and you see all these high prices, our own natural human psychology says as we see that bar go up and up that we just naturally want to buy in because we think that line is going to continue to go up, but it won't. We have to fight that human psychology to be greedy when instead we should be fearful, and be fearful when instead we should be greedy. It's just a part of human psychology. It's part of our fight or flight kind of natural wiring. It's something that's hard to fight, just like it's this is just a personal example, but playing poker, it's natural that a lot of people try to draw patterns in poker rather than realize that a lot of poker is random and there is no accounting a random set of events happening. All you can do is assign probabilities and hope, to get your part of the percentage in that particular hand. A lot of people, like to say, oh, threes are hot today, or, I'm due to hit this straight. They're not really understanding probabilities and how they work and the random shuffling of cards. Just as the human brain isn't kind of wired to deal with that, neither is the human brain kind of built to deal with markets fluctuating and the possibility of earning a lot of money or losing a lot of money all at one time. It's something that puts a lot of stress on the human psychology, and learning how to deal with it yourself, learning to understand yourself and how your mind works better can only help make you a better investor. So that should be something that you try to analyze as well, and also kind of take into account whenever you're thinking about buying or selling. Think to yourself, ask yourself questions. Am I in a good state of mind right now? Am I being too fearful? Am I being too greedy? What, after you've done some of your market research, is this price too high? Is it overvalued? Is it undervalued? You need to make a lot of those evaluations and take into account your state of mind and how that affects your decision making. Last but not least, I'll leave you with one last point, one that I'm sure everyone has heard time and time again, but we all know it. It's that time in the market is worth more than timing the market. Always remember that especially when it comes to a market correction. You're going to see a lot of people who are waiting out the bottom of prices before they kind of turn around, hoping that they can kind of target the bottom and hit it when it gets there. Just be sure that you're worried about your time in the market and not trying to time, the bottom of the market. You'll have a lot better success that way. You won't miss out on as many opportunities that way, and you'll better weather this correction and hopefully find some good buying opportunities out there right now while prices are coming down. I know I'm looking. Hopefully you guys are too. So with that, appreciate you guys again. Thanks for tuning in. Again, don't forget to hit like and subscribe if you haven't. Love each and every one of y'all out there. And as always, stay geeky, my friends.